Now, traders at Access Bank say a few trades were consummated at Tuesday's trading session as investors' appetite for the current bond yields continue to dwindle. Dimeji Obasa, team member, Treasury Coverage at Access Bank, joins us now to give us a midweek wrap of activities in that market. Dimeji, thank you very much for your time. So let's talk a bit about that unmet offers of bonds and what exactly are the dynamics there, because immediately I begin to think that it's very likely that we're going to see prices fall. What are your thoughts on what exactly is going on?
Thank you very much for having me. So what we've seen is it's been a lot of cautious trading, right? Investors are not, because of the general consensus, like you said, that we don't see price falls, yields are supposed to go higher, and that seems to be the general consensus. There's been some sort of resistance at the current levels for a lot of the market participants that are looking to fill their bids. What we're seeing, and this is something that happened last month as well, where the bulk of market participants preferred to take their bids to the auction to try to get them filled at probably preferable rates, right, or probably higher rates. So that's basically what we've seen. We've seen some offers, but the bulk of the demand is not being at those levels because the bids are higher.
Right. But do you think eventually those offering will win out here? How do you see things playing out over the next few weeks?
Over the next few weeks, right now we still have that, that resistance, and the market is almost, the activity in the market is very minimal at this time. So what we see going forward we expect to see we expect to see the market sort of take the cue from the auction results, right? When the calendar does come out and the securities that are on offer would be reviewed, as well as the amount, market participants might begin to, maybe reprice and refresh their quotes and maybe try to align themselves with what the general consensus would be at that time and where the outlook for these rates would be.
Right.
So depending on the results, if there are unmet demand from the auction, you can now then see that coming into the secondary market, and at that point they might be willing to take some of the offers that would be available then, maybe at lower rates.
Okay. As I round up, a quick question on the foreign exchange market. As you know, Nigeria is proposing a Eurobond issue. Many are expecting that it should be done in the fourth quarter. What are your thoughts on the likely impact of that, as we assume, successful issue on the foreign exchange markets here?
Okay. We will typically take on that Eurobond position to show up foreign exchange reserves. The CBN, from the MPC meeting, where they stated their commitment to meeting the demand for eligible transactions, we expect that they may be they are likely to come into the market and, intervene more, particularly for some of the SMEs invisible transactions, which they've been doing already, but they might be looking to be increasing that, and also focusing on some other, some of the unmet demand that we have in the I&E window. So we may see some more intervention by the CBN in the FX market, which might then, try and, put in more liquidity in that market and maybe stabilize